Hey, welcome back everybody to Coffee
Sometimes tea.
with Jen and
Marcelo.
Marcelo. So we're continuing our advanced modules on what?
Class. So this one is going to be on risk management and leverage investing, focusing on how to approach, mitigate risk when using borrowed funds to invest. So here's a simple breakdown of what this means. Understanding risk in leverage investing. So the key leverage investing amplifies both potential returns and potential losses. The key risks are market risk, interest rate, and liquidity. So let's just briefly go over what this means. Market risk. The risk that the market moves against your investment, magnifying your losses due to leverage.
These are just definitions from ChatGPT4. We're not financial people.
We're not super guru traders or financial planners or CPAs or attorneys or any of that. We're just giving you a quick overview, carrying on in financial planning, and your
financial
credit
literacy.
Yep. And part of this risk in the financial world is trading and stocks, and there's risk to all of this. So we are going to briefly go over this. If you want to have more of a deep dive on this, let us know. If you're already in our school, we can have a breakout session and kind of go over the pros and the cons and things like that. And if you're not and you're watching this for the first time, then hey, join us. Our community is free. Our information is free, and we welcome you. So interest rate, the risk that the rising interest rate increases the cost of borrowing, eroding your profits. Liquidity risk, the risk of being unable to quickly exit the investment without significant loss. So let's go into this. We're going to kind of get into risk management frameworks. Risk management and leverage investing involves strategies and tools designed to identify, assess, and mitigate risk. Financial institutions and investors use several frameworks and tools for these purposes. So the value at risk. Okay, statistical technique to measure the risk on an investment portfolio, VAR. Okay, estimates the maximum potential loss over a given time period with certain confidence level, helping the investor understand potential losses in adverse market conditions. Could this be stocks? Could this be real estate? Could this be commercial property? What is the risk? Stress test. Okay, what's that? Involves simulating an extreme market condition to evaluate how an investment portfolio would perform under such scenarios. 401ks, again, trading, options, stocks, real estate. These are just some examples. It helps in understanding the impact of severe market downturns on leveraged positions. You go get a loan, and you buy a bunch of property, and the value of your property tanks because something happened in the world to cause that to tank. And we did have a financial crisis. It didn't seem like that long ago, the housing bubble. Now, in today's time, they're talking about commercial, because with a lot of people working from home, downsizing, things like that, and people might not need that commercial property like they did, even 5-10 years ago.
Right.
Risk reward, a fundamental tool that compares the expected returns on investment to the amount of risk undertaken to capture these returns. It's crucial in assessing whether the potential reward outweighs taking that risk. Diversification. So as the saying goes, don't put all your eggs in one basket, spread it out. You want to have coverage. Some people will say have your very conservative, low risk basket, and then your mid, and then your high risk. But make sure that high risk doesn't wipe out the other baskets. Okay, so stop loss orders, that's trade. So for instance, you want to buy stock, you're doing day trading or whatever kind of trading you're doing. This is a good example of this. You want to buy something, and then you buy it at a certain market number. Well, what if it goes down and you're buying for it to go up? You're thinking, hey, I'm going to buy this, and profits are going to go up and I'm going to make money. But if you don't have a stop underneath that and it tanks because you got into the market too late, or when it turned,
good luck.
If you didn't put a stop there, you could potentially wipe out your entire amount that you risked.
We'll go into that later.
And we will. And just one quick note on that. If you are trading, if you are doing things like that, there's tons of videos out there that you can look into. We do have some people in the group that might be able to help you out in that department. Again, if you want to hear more about that particular subject, let us know. We'll try to have a breakout session on that specifically. But if you are going to go down that route, always look at your total number of what you're putting at risk that you put into your account, say $2,000. I would say don't go more than 1% to 2% as your risk for that day or for that period of time.
Correct.
So that way, if you lose that 1%, then you're done for the day. Call it a day. Regroup. Do not revenge trade, because then you're just going to go down the rabbit hole and end up losing everything. So that's my rant on that. Okay. And then monitor your leveraged investments. Okay. You want to make sure that is the market's going to cause you problems. What are the interest rates on what it is that you've gone out and got loans on, or possibly properties that you took against. There's a lot of information there. Okay. Implementing risk management. Assessing your investment portfolio exposure to risks, applying tools like VAR and stress testing under potential losses, using diversification, and staying informed about market conditions. So these are just some quick overviews on this. This can be a completely whole nother mini session on this in itself. So risk management and leverage investing is about being prepared for the worst while aiming for the best, which is basically what we do all the time. You just have to plan ahead for the possibilities of what could happen, and then prepare for that. If this happens, how will you cover yourself? If this happens, how will you cover yourself? So always keep that in mind when you're using these kind of tools and resources, and when you go after these maybe high risk ventures that you're getting yourself into. So if you have questions, let us know. Follow us if you're not already in our schools. And we hope to see you here again soon. So cheers to you, and thanks for joining us here at
Coffee.
Sometimes Tea.
Thanks, guys.